Good afternoon. This is the Chorus Call conference operator. Welcome, and thank you for joining the Dada Spa second quarter 2016 financial results conference call. After the presentation, there will be an opportunity to ask questions. At this time, I would like to turn the conference over to Ms. Chiara Locati. I'm sorry about that, madam. Investor Relations Manager of Dada. Please go ahead.
Good afternoon, and thank you for joining us today to review Dada's first half 2016 financial results. With me on the call today is Lorenzo Letri, General Manager and CFO of Dada Group. After prepared remarks, we will open up the call to a Q&A session. I would like to remember you that in the Investor Relations section of our website, we have provided the slide of the presentation, which is intended to follow our prepared remarks. With that, I would like to turn the call over to our General Manager and CFO, Lorenzo Letri.
Thank you, Chiara, and thank all of you to be part of this conference call regarding the H1 results that have been disseminated a couple of hours ago. Let me point out that we are very happy about this result, as we were in announcing the Q1 financials. Q2 has been also a good quarter for Dada. We've increased most of our financial, business, and operational metrics, and I will drive you shortly through the presentation in order to have then the following Q&A session to address any questions you may have. So let me highlight the main themes of our first half of 2016. It's slide number 6. I guess you are already familiar with our main assets and key elements, so I will skip to slide number 6, which summarize our main achievements of the half year. All our metrics have increased. Some have increased materially, significantly. The number of new customers has increased more than close to 50%. The new domain registration, as you know, it's one of our main operational metric, has increased 40%. The number of customers, which is probably our main metric with regards to customer base, has exceeded 5,000, 90,000 customers in all Europe. So that's really an important number, and we see this trend continuing so far. And our market share in the period has increased in most, if not all, the geographies in which we are present in Europe. Revenues have increased 3%, actual year-on-year comparison. I guess you are quite familiar with what happened in the UK. Portion of our revenue derived from Great Britain, and therefore the devaluation of the pound sterling has partially affected the results. On a like-for-like basis, growth would have been 7%. That is also excluding any kind of contribution of the acquisition and dismissal that have been done compared to the previous year. EBITDA has been close to the level of last year, so 6 million, close to 18% margin, which is round numbers in our industry, and this despite important operational costs that we have incurred in order to increase our customer base and the number of services that we provided in the semester. And finally, the overall cash generation of the company allowed us to lower the net debt, which is now close to 25.8 million. On the business initiatives, we kept on strongly pushing on all the activities related to the interaction with the customer. Customers are for us the real embedded goodwill, as I mentioned at the beginning of this call, and therefore by providing technological services to our end users, most of which are small and medium businesses, having a human touch, a human integration, a expert that is able to support our customer with regard not only to the more technical aspect of the service, but also to engage him into an interaction that can lead him or her to better use the service itself, to acquire additional functionalities, and hopefully to get more products, upsell and cross-sell, considering our very ample portfolio of applications. And therefore, we are counting heavily on the customer interfacing activities, so we're not just talking about customer support, but also outbound activity and as I said, now cross-selling and upselling. With regards to the products, what we are moving towards, and we discussed that during our last presentation, on going towards higher end part of our portfolio with more dedicated and managed services, more tailor-made projects that can allow more advanced proposal and proposition from the end users in order for them to drive their path towards the digitalization, which is an activity which is starting to bring quite satisfactory results. Probably the most evident is the increase in the number of the virtual servers and dedicated server business lines, which are growing significantly. M&A, as you know, is one of our key expertise. We did close the Sfera acquisition, which was announced a couple of weeks ago. Sfera, as we mentioned in our press release, is a key player in northern Italy, which owns more than 2,000 customers, most of which use managed services, so in line with what I just described. And we are bringing their expertise in high-end IT solutions, which more and more are required by our customer base, and we were lacking today an ability, a capacity to provide in an effective way this kind of services. We've managed through this acquisition of Sfera to tap an addressable market, we believe, in a very, very, very interesting way, as we did with Etinet last year, and I can anticipate that Etinet, as you will see on our financials, is performing very well, and we hope to do the same with regards to the integration and optimization of the company also with Sfera. As we can briefly see on slide 8 and 9, the strategic fit that I was mentioning is shown in the pyramid, whereby you can see, let's say, our overall portfolio of offering and where the Sfera value proposition insists. And you can see that we can, with Sfera, complete our offering with the managed and customized IT services in addition to bring in-house some very, very specialized professionals. As you may imagine, the turnover in our industry is quite high, and being able to have in-house very, very skilled and expert human execution capacity through the people that we are finding in the company. All of them are sysadmin, programmers and developers, so it's very high IT skills, which is a rare expertise or very, very expensive expertise on the human capital. The deal structure, as we said, we believe is quite interesting for Dada. We have paid already for 100% of the capital 2.3 million at closing, which has occurred on July the 14th, so it's slide number 10. And we shall pay an additional sum between 1 million to 1.4 million in the next 3 years, so ending of the third year after closing, based on certain achievement of the financial results of the company, which have been pre-negotiated. So we've shared an ambitious plan, and proportionate to the achievement of those results, the shareholders will get a higher or lower consideration, and that allows us, of course, also to retain and maintain those key people inside our organization for a long period. And finally, we are benefiting from the current interesting credit scenario via a funding of the transaction, which allowed us to lower significantly our cost of debt. Just to give you an idea, the spread on our 2.5 million financing of Sfera was 210 bits. So it's really interesting rates, and we hope we can do even better conditions, secure even better or similar conditions also for the rest of our debt in the second part of the year. If I may go on slide number 12 and 13 and 14, here you can see how our better, more interesting metrics have evolved. So our KPIs with regards to the customer stock, which today, as I said, reached 590,000, so increasing 7% year on year, compared to the same data of the end of June 2015. And even more important has been the growth with regards to the new customer acquired. We have spent a higher amount in marketing cost, but not as proportional as the increase in volumes. We'll see that in the future. We've been very, very effective in promoting initial offerings with low pricing, and therefore we shall see, starting from Q3 and Q4 of this year, the level of return and conversion of those customers that have been acquired through these more aggressive marketing campaigns. Slide 13 analyzes the KPIs with regards to the products on the product side. So also here, domain stock reached 1.86 million domains under management in all Europe, and the new domains registration has increased similarly to the increase in new customers, close to 40%. that has allowed us also to increase our market share in all the geographies. Italy, which is of course with the UK our biggest market, our market share exceeded 20%. It was 13, 14 probably some time ago. So we are very positive about how we are delivering growth. This growth has transferred into is reflected in the financials, and you can see it in slide 14. So most of our financial metrics have increased, also including the impact of the exchange rate. So revenues plus 3%, EBIT 10%, EBITDA 1.5% minus, including all the costs that I've just mentioned, and the net result closed at 0.4 million compared to the 0.3 million of the previous year. Of course, last year, you may recall, we had a capital gain of 2.2 million regarding the contribution of Simply to 4W. So we believe that it has been a good half year and a good quarter. If you go on slide number 15, revenue growth has been consistent also comparing to Q2 2014, Q2 2015, and Q2 2016. So it was consistently increasing on a year-on-year basis. Of course, our business has some component of is a bit cyclical. So we have usually the first quarter of the year can be usually stronger than the rest of the quarters. And the contribution of our international activities, by international, of course, I mean extra Italy, still is significant and now represents 55% of our overall turnover, with Italy still and the UK representing overall our biggest contributor to our revenue. So the two of them represent close to 70%, 75% of our total turnover. Probably an interesting element to point out on slide number 16, which shows the bridge of the revenue on a year-on-year comparison. Both, if you exclude the impact of the foreign exchange and the impact of the extraordinary activity, the core business in local currency have the segment that we tend to see and analyze, so VNH Europe and VNH UK, both of them have increased despite a market situation which is still very, very challenging, with the big players developing quite aggressive campaigns. So in a challenging market, DADA is performing / overperforming very consistently and quite well. We believe the EBITDA margin, so slide number 17, is good, can and should, of course, be better. So we are working to get even better results in the future, but considering the level of effort that we are putting on our structure by having a significant burden to manage additional resources, additional volumes, and additional clients, we believe that this is now a plateau, a level based on which we can add volumes without incurring into additional operational costs. So we have now reached, we believe, satisfactory level of operational costs, including the labor cost, and therefore from now on we should not expect, apart of course of the direct costs which are proportional to the increase in volume in revenues, we don't expect to have additional deltas on a year-on-year comparison in the next quarters. The EBITDA bridge also confirms what I was just saying, is that the core business and the product margin is a positive contributor, still is a very positive contributor to our EBITDA, so it has increased 5.5%, so plus 1.1 million, whereas the labor cost that I just mentioned, which has increased indeed 1 million, and that, as you may see on the previous slide, that depends also on the consolidation of Etinet, which was not in our consolidated financial last year, and some insourcing of customer care in Italy, Spain, Portugal, and probably France as well. Yes, also France. Of course, that has affected the metric, but as I said, the increase in labor cost is not due to, let's say, being consistent and proportion to the increase in revenue starting from Q3 2016. We are almost in line with CapEx, so we don't see material deltas versus what we were projecting and compared to the previous year. Probably an interesting element to highlight on the financials is that we are expecting to get some better financials, so here I'm talking about financial costs, in the future, also based on the renegotiation of our long-term debt that we have with some major banks. So we hopefully should be able to keep on decreasing the burden for interest in the future, and taxation is quite similar to what we had last year. Net financial position, as I said at the beginning, improved to 25.8 million. I guess another important proxy of this increase is the net operating cash flow that has improved close to 30%, so 4.9 million in the period compared to the 3.8 million in H1 2015, and that is something, of course, that is quite accretive to our overall leverage capacity. Of course, we don't have, as of today, much room to do additional extraordinary transaction based on our overall current leverage, but we definitely will keep an eye open if any opportunity to optimize our perimeter if this occasion occur in the future, of course based on our own resources. Slide 22. As I said before, the structure of our net financial position is suggesting us to try to extend the overall duration of our overall debt, so we still don't have let's say, elements to anticipate to the market, but we are definitely working to take the advantage of our current market credit scenario to get both advantages, so on one side to extend the duration of our total indebtedness, and at the same time try to lower further the cost of capital in the future. Let me skip to the strategic view and the guidelines for 2016. We have no elements to modify our guidelines. As we said, that we are projecting for the full year a mid-digit growth and an increase in EBITDA, so growth in revenues, and increase in EBITDA which can be more than proportional to the increase in revenue starting from Q3 2016. So we still believe that this is achievable. That of course exclude all any effect that we may have from the exchange rate or the change in perimeter, but we still believe that this guideline is achievable. Our strategic positioning is strongly pursued by increasing and aiming at increasing our market share and the number of new customers and the number of new products. That is something that we have anticipated to the market, say close to a year ago, by adding new products, adding new people facing the customer, and by pushing with some innovative and aggressive marketing campaigns. So this is paying. We believe is bringing results which will be converting into even better financials, as we said, starting from Q3 and Q4 2016. So once those customers that have been acquired in the future will convert into paying customers, and of course we will see how our ability to have this conversion occur and to have this conversion transform into additional revenues and additional marginality, we will then have, let's say, a good proxy of our success, of the success of our initiatives. We still, as I said, keep our eyes open into looking for additional growth also by small acquisitions. So we don't have today anything concrete on our pipeline. Probably the H2 2016 will be aimed at consolidating Sfera and integrating the technological platform and providing the overall group with a full range of products which will include Sfera solutions. But of course, we will keep you posted if and when we will get to have some interesting M&A opportunities. I will not repeat again our investment highlights, which I guess you are quite familiar with, but let me confirm you that we are quite happy. We've done, we believe, a good quarter, a good first half here, consistent with what we were forecasting, and we hope we can keep on delivering these results for the future. We've been asked about the effect of the Brexit, which is of course an open question. I will hand over to the Q&A session in case you want to elaborate further on this matter and other questions that you may have. Thank you.
Excuse me, this is the Chorus Call conference operator. We will now begin the question and answer session. The first question is from Gabriele Berti of Banca IMI. Please go ahead.
Hi, good afternoon, everybody, and thank you for your presentation. I have three questions for you. The first one is, which is the weighting of Great Britain pound on your total revenues? The second one is, in how long do you expect the full integration of Sfera? And the last one is, which is your target of revenues and profitability for Sfera in the short term following the integration? Thank you.
Thank you, Gabriele. So, pound account roughly 30% of our turnover. I think it is very important to point out that the overall Forex impact on our numbers has two elements, can be analyzed in two elements. On one side, you do have the impact of the conversion of the financials that are actually expressed in pounds. So the overall P&L of our controlled entities in the UK that are of course expressed in pound, then get converted from one year to the other, and the comparison therefore from one year to the other suffers or benefits from the different exchange rate. But that does not imply for us to have a forex loss or gain with a cash component. Okay, so it's it's a forex gain or a forex loss deriving from the translation of the balance sheet. Okay, so it's a non-cash impact. Then, and that accounts probably for 80%, if not more, than the overall impact that you see on our numbers. Then there is a minor, in our case, fortunately, effect deriving from some inter-group transaction, most of which are either commercial, so one company buys like domains in euros and then resell it to our UK subsidiary, which pays this need to have the funding in euros to repay the cost, and therefore this is an exposure in pound which can be affected by the exchange rate. In this kind of interactions, we tend, in most cases, and where possible, to cover this exchange rate risk. Okay? So by using plain vanilla coverage, forex coverage instrument. So usually buying forward or selling short. So we do have effectively in the actual numbers an impact which, as of today, it is probably less material than we would have thought. Of course, nobody, maybe you can tell us what we can project in the future evolution of the exchange rate. But as of today, the overall impact, if we assume that the exchange rate will be the same for the second part of the year, the overall impact on turnover will be lower than 2.5 million on the whole year. So we are not talking about a material effect. Okay?
Okay.
Second, the integration of Sfera is something that has been already defined and planned. So we have already started both the technological integration and the commercial integration, whereby we can have their products sold through our data platform. I guess most of those services, being managed services or tailor-made, will be sold in Italy, where we see important need and request from our customers of this kind of managed IT services. So I guess we will start to have a good traction and visibility on the synergies starting from Q4 2016. We have projected, of course, we cannot disclose it, but what we can anticipate is that in the 3-year plan, which have been negotiated with the founders and the sellers, which have become now full part of our management, we have embedded and provided for growth in the high end of the single digit, low end of the double digit. So we expect the company hopefully to grow as if not better than us, and we hope that they will be able to deliver this growth also for the future. We'll be able to have a visible effect of their numbers, I guess, starting from Q1 or Q2 2017, in order to prove that they are delivering as we are expecting. So I guess this answers the second and the third question.
Thank you very much.
Okay.
Mr. Lepri, Ms. Locati, at this time there are no questions registered.
Okay, so thank all of you, the 13 participants of this call. So I would like to thank individually and all of you to be part of this conference call. Hopefully we will reconvene for the Q3 results, which will occur in November. And in the meantime, I wish you the best, and for those who can do some holiday time, have an excellent time. Bye-bye.
Bye-bye.